First let's get on board our technical expert for today, Sacchitanand Uttekar of Tradebulls Securities is joining in. Good morning, Sacchitanand. Good to have you on the show. Yesterday we saw, the bulls take a breather of sorts after a record close on Friday. What would you say? Do you say that, there's some bit of fatigue setting in after the kind of rally we've seen over the last few months?
Good morning, Nanita, and thank you for having me on the show. Most of the cues are on the negative side, but if you look at the trend performance of Nifty, it is still holding very well above its, 5-day exponential moving average. Even yesterday, we saw a bit of profit booking, but if you look at the overall broader market, when we look at Nifty 100 or Nifty small cap, 100, both, closed on a positive note. The pressure was clearly evident from the banking side, banking and financials. But if you look at even the Nifty bank performance, it has been more sideways since last two trading sessions. So it is still concealed within the trading range of its Thursday's price action. So I think the overall structure of the market still remains healthy. For the day, we may see some sideways range bound action, while the major trend for us still remains positive until unless 18,600, that particular level, holds on a closing basis. It has been trending very well above its 5-week exponential moving average, which is placed somewhere close to around 18,620. So until unless we don't see a closing below this particular level, I think the entire structure still remains buy on declines. And even today, if you look at the data, despite of the fact that Nifty Bank is somewhere close to its near-term support, it still needs a confident closing above 44,000, 44,400 to unlock that momentum. But when it comes to Nifty, I think, until unless we don't see slippages below that 18,600 mark, I think 18,700, 18,650 would be a decent level wherein some longs can be committed on the positive side. So net, we still remain positive. We don't see markets changing its course. After a good rally, there could be a breather which is evident since last couple of trading sessions. But the sector rotation has been really healthy. So the stance for the Nifty still remains positive.
All right.
From a trading perspective, for the day, we are expecting further slippages, but those slippages could be bought in. So we are expecting some demand at around 18,680, 18,700 kind of a cluster, and that's why we are still recommending building longs. The stop loss for the trade should be placed at around 18,605, and from a trading momentum perspective, I think 18,820 would be an important level.
All right, 18,820 important level to watch out for, and it's a good buy on declines market until unless, of course, Nifty slips below that 18,600 level. If you look at the HDFC and HDFC Bank duo, what are the kind of levels would you be expecting on these two charts now?
Well, Anita, I think both the counters are trending near their 200-day exponential moving average. They are showing very similar structures. But if you look at HDFC, this particular stock is one of my top picks for today. If you look at the weekly structure, it has been holding well above that 2,600, 2,620 kind of a support zone. If you look at the daily performance, we saw a very strong rebound on Friday's session. From that particular base at around 2630, and it has again tried to reconquer that trending 20 days exponential moving average, which was acting as a resistance. So we have seen a swing there. On the daily chart, it clearly exhibits a falling wedge formation, and falling wedge formation is a sign of a upcoming bottom. So that's why we believe that the stock may very well surpass that 2700, 2730 mark in the days forward, and that's why we are recommending building long positions here. The stop loss for the trade should be placed at around 2638 on a closing basis, and any declines towards 2650, I think that will be a good level wherein some longs could be committed when it comes to HDFC Limited.
Right, we're also getting some queries, query segment. What are your recommendations for today, Sacchitanand?
Sanida, two recommendations. One is HDFC Limited. The trade setup remains positive. We have already seen a healthy breakout from its falling wedge formation. The weekly 4 weeks consolidation now looks ready for a rebound. So we are expecting a price target of around 2700 when it comes to futures, 2700, 2730 on the higher side. The stop loss should be placed at around 2638 on a closing basis. Any declines towards 2655 should be utilized to create long positions. The other stock on our radar has been LTI Mindtree. That has been consolidating here, but if you look at the weekly monthly structure, there is a long-term breakout in place. We're expecting this particular momentum to continue towards 50 to 50 on a positional basis, and that's why we are recommending longs with a stop loss at around 4990.
Well, those are recommendations coming in from Sacchitanand. With that, Sacchitanand, thanks a lot for taking out time and joining in this morning and sharing your thoughts with us.